GM, good morning. Welcome to the Milk Road Show, the daily crypto show that feels like catching up with your college buddies. Pure joy until you realize the hangover now lasts 3 days. I'm your host, Jay Hamilton. It's Thursday, August 21st. Yeezy dropped a token. We are at that point in the cycle. Should you be buying the Yeezy token? What happened with this drop? I can't believe the way this was dropped. We're going to talk about that. How can we not talk about that? We're also going to talk about why crypto is the new Mag 7. And today's guest has a bold call on the outperformance. He believes that what he is calling the crypto core, aka the new Mag 7, we're going to talk about who will be in the crypto core and why he believes they're going to outperform the Mag 7 and public equities over the next decade. Also, we're going to talk about DATs and so much more. Joining us today is Elliot Chun, partner at Architect Partners. Also, before we jump in, super exciting news. We have just launched a new website. MilkRoad.com got a fresh look, new milk, and it is so exciting because it's faster, it's smoother, and it's got all of our content in one place because we've been pumping out so much new content. So to celebrate the new website, first of all, MilkRoad.com, check it out right now. Let us know what you think. Hit us up in the comments and let us know if you think it's good. I hope you do. But to celebrate, we are giving discounts on Pro All Access. Also, you can get our new Macro Pro product at 25% off. So hit milkroad.com or the link in the show notes. Check out the new site. Go pro today because the next 6 to 12 months, as we're going to talk about today's episode, is going to be an opportunity to make serious money. And you're going to want a community to do it beside. So go pro. Today's episode is brought to you by Aura. Remove your personal info from the web before scammers get it. Also brought to you by Figure Markets. Grow your cash like a bank. No lockups, just real returns. With that, Elliot, welcome to the Milk Road Show.
Jay, I just got done looking at the new Milk Road website and my 3-day hangover is gone. I mean, it's amazing. All you got to do is check out all the stuff and it's like an instant fix. Well done.
I appreciate that, Elliot. Thank you for plugging my plug. That's I wish every guest did that for me, making my job easy. Okay, let's start with you and I were not planning to talk about Yeezy launching a token today when we were prepping for this episode earlier this week. But hey, we woke up today and Yeezy launched a token. Let me just set this up he launched this token by posting a 4-second video on his Twitter where he looks completely out of it and is clearly just told by somebody, hey, read this. And he says, it's 4 seconds of him just saying, the Yeezy token is live, go buy it, basically. So we have this Yeezy token. Elliot, what do you think?
I mean, it's brutal, right? It's brutal, but it's a necessary evil. First off, why is it brutal? It's brutal because it's been proven through these types of launches that the long-term or the holders that participate, they get wrecked. And I from what I've read, they actually have in the fine print, there's no class action lawsuits. So it feels like they're basically have a free call option to rug any of the holders, which seeing the track record is not surprising, right? But it does bring in new market participants into the crypto ecosystem. And all these just meme coins in general, NFTs in general, they probably have a higher impact in terms of bringing different users of crypto into the ecosystem. So that part is a positive. Now, again, it's brutal because a lot of people get wrecked. A lot of people don't know what they're doing. And a lot of people are just following because they're fans. So you have people that are abusing, I'll say, their popularity at the expense of their followers. I hope that there are longer term repercussions, but there's meme coins getting launched every day. And some people are making very significant wealth off of them. And until that stops, how are we gonna stop it?
Like, it's just, I'm trying to share my screen here to show the Yeezy top sellers is a list of everybody, like the top 10 that have sold the Yeezy token. and none of them bought the Yeezy token. They all got the Yeezy token given to them at $0, and they're already dumping. Top sellers sold $1.4 million worth of Yeezy. So somebody second 1 million, next up 975,000. List goes on. Top 10 all making over $100,000 just given this Yeezy token, and then dumping right away. It's so scary because, as you said, this is the entry point for so many people into crypto. It was, I don't remember who said it recently, but we all assume that, okay, if you're in the space and you're going to enter crypto, and I'm sure you're like this with your family and friends who aren't in crypto, my advice is simple: just buy Bitcoin, right? Don't even go down the risk curve even further than that, because, and it's not to say I don't believe in Ethereum and Solana. I'm huge bags in those, but I'm very confident in Bitcoin being a simple and easy investment, and you're not going to get wrecked. And that's my main concern. And you're probably not going to have the stress of like the ups and downs. But most people who come into the space come in through a token like this, a meme coin, like some sort of cultural token, Trump coin, these types of things. And when they come in is usually in one of two ways. They usually come in at the top and their exit liquidity for these scammers, or they come in when a new token like this launches, and again, same thing, exit liquidity. So it's just, yeah, I don't know. I got everybody out there. Tell me if anybody bought the Yeezy token. Give us a comment. Let us know if you bought the Yeezy token. If you've got an investment thesis for the Yeezy token, I'll have you on the show, because I would love to hear somebody actually give me an investment thesis, because this just seems like a pure grift. I mean, I haven't read into the docs or anything like that. I love that you say that the doc says that they cannot be given a class action lawsuit, which is, again, shows, yeah, it's scary stuff, man. It's scary stuff. Be careful out there, folks. Be patient. Be patient.
It is scary, but there is something to the attention economy, and the meme coins keep coming out, right? And I tell people, if you went back in time and you had MySpace and Facebook and all those groups, the way that they would have compensated the biggest attractors or the attention grabbers on their website would have been through a meme coin, right? We will pay you for as many views and likes that you get. Now, that technology did not exist. The 2025 crypto technology did not exist in the late 90s, early 2000s. So they had to do this very silly marketing, sell ads business model, right? That still exists today. But you could argue that Yeezy, in this example, is monetizing his attraction, is monetizing his attention. He's monetizing the things that he's been doing for all these years that he may not have been able to monetize before. Now, let me be clear. I don't agree with this type of stuff at all. And it's, you have to squint when you see kind of the ICOs, the NFTs, and the meme coins. And we're talking about cycles here. And we're talking about what works in the short term, what works in the long term. You got to have these experiments where you come out with something like this and bad things happen to uninformed people so that you get smarter and they don't happen again.
Yeah, so long as they don't rage quit and leave because they came here once and lost all their money, which is like but I think you have to have an entry point in some way, and you cannot deny that crypto is giving an entry point to finance and investing that a lot of the world doesn't have or hasn't used previously. And if we can get more of the world onboarded into finance and investing and understanding how to manage their money and understanding how to make their money work for them and grow their money and have access to better financial products, which is like this whole side of crypto that we're all so excited about. I mean, we could talk all day about that. Then that's a huge win. It's just I just hope we don't come here for the one token and then leave. Let's talk before I want to talk about your take on Mag 7 versus the crypto core. But before we do that, just to give our audience a little bit more background on you, talk to us a little bit about what's your investing framework? How do you approach crypto investing, but maybe I know you're more of like an emerging technology and innovation investor, which crypto is a part of. Give us your framework and how you think that through.
Yeah, so it's important. I came from the cash equity side. I was on a desk at Bank of America. I sat on a buy side seat for 8 years at Perella Weinberg Partners. So I've been on the investment side across all types of asset classes for a long time. And in our seat, our job was to generate alpha. And generating alpha came in many different ways. And some of it was quote unquote longer term investing, and some of it was shorter term investing, and shorter term being, seconds, minutes, right? What's apparent is it's very, very, very difficult to consistently generate alpha over a long period of time when you are implementing a liquid strategy, i.e., buying, selling, maybe on a daily or weekly basis. It's just hard. And there's a number of reasons for that. The markets have changed, information has changed, phones have changed everything. There used to be an information edge, i.e., if you're sitting on a trading desk, you would get information before everything else. And the smartphone changed that. So, right, everyone gets the same amount of information at the same time. Very, very hard to truly generate alpha. So that's one thing to think about. Second is, where's emerging technologies and what is the impact that it's had on human society? You don't look any further than the internet, right? And you look at what the internet did to the New York Stock Exchange, changing it from a bastion of US capital markets to a glorified TV and event studio within a 10-year period. And you kind of look back and you're like, whoa, that is very significant. I have applied that same lens to what I've tried to identify as what is that next emerging technology that is going to impact human society as much as the internet. I've applied that to this, which is blockchain, DLT, crypto, digital assets, tokenized RWA, DATS, whatever we want to call it, the trend that we want to call it. And so I think it's important to note that, and we'll go into this a little bit, I've shifted my personal investing from in and out, day in, day out, week in, week out, to a longer horizon, 3, 6, 9, 12 months, and just kind of observing. And the more I've been in the industry, and I've been in crypto full time since 2018, I bought my first Bitcoin in 2014, I have realized that I have no edge on where the major cryptocurrencies, Bitcoin, Ethereum, Solana, etc., Ripple, Cardano, where they're going to go in the short and medium term. In the short term, weekly, or long term, monthly. I do know where it's going to go in the long term, and it is going higher. So why would I try and chop myself up, trying to pick levels, trying to pick cycles, trying to pick XYZ? I know we're going higher from here. And so going higher from here, I've chosen to say, let's go all in and going higher from here. I take all my crypto off my phone when I'm wherever because I don't want access to it because I can't change it. My thesis is set, and I've been so confident in it that I've invested my career since 2018, and here we are, 2025.
It is in a way the most transformative but yet simple investment advice you can get is like, get out of your own way. Like, don't fuck it up. Like, it is the thing that I see so much in it's the need for immediate gain. It's that serotonin hit. It's the need to get rich quick. It's that you saw somebody else do it and you're like, okay, that's what I'm here for. You need to remove that expectation, because the truth is, winning right now in crypto is incredibly simple. It's just not simple in the next month. So don't try in the next month. But in the next year, the next decade, it's actually very simple. Just get out of your own way. And I think it's hard to appreciate that when you're here every day, because your fingers you want to get into the kitchen and you want to tweak it and you're looking for that thing and, oh, there's my opportunity. But which is to say, like, I'm not saying there's not going to be, and I think this kind of leads to my next question is, I'm not saying there's not going to be ups and downs. You had an interesting take that you shared with me on where you see, if we zoom out long term on Bitcoin, you had an interesting take on where you see Bitcoin going in terms of whether we're going to hit a high next or whether we're going to go down to a low. What are your thoughts?
Yeah, one thing I just want to address on trading, right? And hearing other people, maybe friends, talk about their wins. Nobody ever talks about their losses. And it is so brutal because everyone says, "Oh, I crushed it on this." They're not going to tell you I got my face ripped off on that. And that type of immediacy, that type of thing, it's very difficult to have that discipline. And by all means, like, allocate a portion of your portfolio to do that, to play around, because that part is enjoyable to some. But yeah, no one ever talks about their losses.
Here you go. I lost $25,000 on a Moonbird. So there you go. Like, you know, like, you want to talk about losses? I got them. I did the NFT thing and I made my mistakes. What's your worst trade that you've ever made?
Selling part of Bitcoin in 2014.
No, but you were probably made though. You were probably up. You just weren't. You were.
Yeah, but I mean, but that's the whole point. Why I thought at the time I was smarter than what I was, and you make the sale, right? I've actually trained myself to not. I mean, look, I came in 2018, so I literally went into ICOs that were just straight frauds. Mm-hmm. I mean, you know, you send your money and then you get a call from the co-founder and the co-founder says, the guy with the keys is literally gone. And you're like, what?
What?
How did that happen?
What do you mean?
What? You're the co-founder. What does that mean? He's like, I don't know what to tell you. He's gone, like gone with the keys. Okay. So those are some pretty bad trades. To your question about where we are in the cycle, look, I generally, I've gone to calling levels more than calling specific price targets. And so where we are in this cycle, you know, we're at the 110 phase. I feel like we're going to hit an 80 handle before we hit the 250 handle, right? But I do think that we're going to hit a 250 handle. Maybe not this year.
In the cycle?
So cycle is a funny term now, right? Because are we talking about the 4-year halving related cycle?
No, I think that's over unless you want to debate me on that, but I think that's over.
Yeah. So then my question is what cycle are you referring to here? Because I believe that we're no longer in a cycle. And I believe that we've taken our lumps. What are the things that could bring us back down? I think people not applying digital asset treasury strategies correctly is certainly a risk. Yeah. There's some names that are large enough in our industry that are a risk. For example, if something bad were to happen to Tether, that is a systemic risk to our industry. I've been reading up a lot about quantum computing. And so part of my thesis is that no matter what quantum computing comes, that the Bitcoin protocol and the network will be able to resist that the way that it's built. So I'm not as concerned, but certainly I could be wrong about that thesis.
We did. I just to mention, we did an episode with Jameson Lopp, one of the OG Bitcoin devs and a leader in Bitcoin security, and really focused on, okay, how do we keep Bitcoin secure for, the next millennia? And he's concerned about quantum computing, but he also presents a case of it's solvable. It's still early enough that we can handle it. And I think, look, at the level that Bitcoin is at now, we've gone from retail to institutional to we're starting to enter the sovereign cycle of Bitcoin, right? It's still very early on the sovereign side and still early on the institutional side as well. And even the retail, early on all counts. But I think we will solve that.
Just listen to Jameson. He's awesome.
He's amazing.
Oh man. Pro tip, don't Google your name and city. I just did and instantly regretted it. They've got everything, my address, my email address, phone number. If you've ever wondered how scammers get your phone number or why your inbox is constantly flooded with spam, this is why. 24 hours a day, 7 days a week, data brokers are collecting and selling your information online, all without your prior consent. And they're making billions of dollars doing it. Now, sure, they're legally required to remove your information if you ask, but they deliberately make that process as complicated and confusing as possible. That's why I just signed up with Aura. They take care of all the hard parts for me, automatically removing my information from these sites and, more importantly, keeping it off. Aura offers fraud and data leak alerts, $5 million in identity theft protection, a VPN, antivirus software, password manager, and round-the-clock US-based customer support all in one place. Try Aura free for 14 days. Go to milkroad.com/Aura.
Why do people invest in real estate? Because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets. So my take on cycle is that we're in macro cycles now. We're impacted by liquidity and basically currency debasement and money printing that comes out of the major economies, mostly the four majors. And that, from that perspective, it feels like our take at Milk Road is that this cycle peaks sometime in 2026. Still too early to say when in 2026. Like, is it Q1? Could it extend even into Q3 or Q4? I don't know yet. So we got to see what happens with rate cuts in the fall and with liquidity. But that would be my view on the cycle. I don't know if that kind of frames your view.
So I have a different view on the cycle, but I will say we're at Architect Partners, we're crypto dedicated M&A and capital raising. So all we do is talk with founders all day. In this last quarter or 2 quarters, I've had more founders come to me saying that they want to consider strategic options because they're concerned that by 2026, we're going to be in a different environment, in a down environment.
Yeah.
They're not saying bear, but if they're thinking about macro perspective, when am I going to sell my company? We're just coming out of a brutal 22, 23, and 24 cycle. They don't want to live through that again. Let's get some options on the table for 25 and 26 before we start seeing the second half of 26 get a little squirrely, right? So, so I think there's a lot of founders that are in this all day that are also tagging 26 as a, hey, we want to be getting all of our stuff done before then, right? To avoid the next downturn, right? My view is like, look, we're from here to 2030. It's gonna be rocky. It's gonna be, but less so because our industry is much more mature. The people that are leading these organizations are completely different than they were 5, even 10 years ago. The amount of capital that has been invested into the infrastructure in order to support the different holes that we have, we still need to solve 2 things. Security, like we cannot wake up and say XYZ exchange got hacked for, $500 million. Like that just has to stop. So we need to solve for that. And we need to solve for identity. It's too hard for listeners here. I mean, even me, I shouldn't be responsible for self-custody. It's just, we need to make a better way to fix this. And we haven't gotten there yet. And there's some good solutions that are out there. But once those 2 things get solved, I think we're in a totally different cycle, market environment, which I think we're in now. So, my view from here to 2030, we will be at $1 million US dollars per Bitcoin at some point between now and then, which is why if you just close, and this is only a 4.5 year run, if you close your eyes, that's, close to a 10x return. I don't know anywhere else in my market history where I've been presented with that type of a thesis that I'm convicted on, where I can screw it up if I start trying to say, oh, 2026, I'm going to sell in the middle of 26, and then we rip towards the end of the year, and I'm like, well, what did I just do?
Yeah.
Right. And maybe it's 27 or 28. So
yeah, that I think that Bitcoin thesis is actually becoming consensus. Like, that is not a non-consensus thesis. Is, you say $1 million Bitcoin, it can sound a little bit crazy, right now, but by 2030, $1 million Bitcoin, yeah, there's a lot of very smart people that would say the exact same thing. So again, just get out of your own way. Make sure, a good percent, I don't know if you decide your own portfolio allocation. I don't know if it should be 50% Bitcoin, if it should be 20% Bitcoin or 80% Bitcoin, but like, just make sure you're heavily in Bitcoin and in the majors. Now, that being said, I do think ETH outperforms Bitcoin for the rest of this cycle. That would be another take I would have. I don't know your thoughts on that.
yeah, I agree. But mostly because Ethereum is just getting back to its all-time high levels. Right. And so it didn't participate in the way that Bitcoin and other majors participated in this last move higher. But, it is, Ethereum. So it's all about story, and Bitcoin has now, the story of Bitcoin, I think, is becoming crystallized, right? It's all about a store of value, right? It's less about a medium of exchange. People aren't using Bitcoin for payments, generally speaking. It's about value, and it's about collateral. And I think people are starting to understand it, which is why you saw so much price appreciation. I mean, if you look at the last 10 years, it's literally 29x, right? If you look at, the Mag 7 performance from there, it's 7x. I mean, these are just astounding numbers. You have to pause and say, what, 29x? Like, that's an amazing run. I think Ethereum is going to be positioned, maybe not for the 29, but it's going to be positioned for a nice outperformance in this next period, a lot because of the story that's being told by the Tom Lees and the Joe Shaloms at the digital asset treasuries, Sharplinks and the bit miners. They have very compelling explanations for why Ethereum is a investable asset, why it's going to financialize, and why it's going to digitize the financial markets, and why a digital asset treasury holding Ethereum on its balance sheet is similar to ExxonMobil. Look at how ExxonMobil's performance has been, right? We can go a little bit into that, but I think that story is people are starting to understand it. Wait, you're going to digitize financial markets with Ethereum? I want to buy that. I want to own that.
Yeah.
Well, who wouldn't? Who wouldn't?
Exactly. And you sit there and you see stable coins happening, and you see that, oh, Bitcoin is only meant to do this one thing, but the internet does so much more than just store value, or basically send value, is all really Bitcoin does. And I'm not hating on Bitcoin. That's an incredible use case and absolutely love it for that. But there's more to the way that we move value around the internet and around the world. And Ethereum is clearly set up as leader. For me, the thesis on Ethereum is so simple right now. Let me just bring up this chart quickly. This is the ETH BTC chart, and to me, it's just this simple. You look at this and you say, okay, we topped out ETH BTC between like 0.085 and 0.09, right? Okay. Do you believe that we can go back to that number? I don't know that we can get all the way back there, but I believe we can come close. We're at 0.037 right now. Okay, great. Keep an eye on this chart and DCA out at a comfortable level that you think when we get to the peak here on Ethereum, and you can do pretty well, I think, on the Ethereum trade over the next, don't know exactly what the time frame is. Is it 3 months? Is it 12 months? But somewhere in that range.
Yeah, as financial markets come on chain, yes, there are other chains that one can use, some other high quality ones, but it's taken this long for Ethereum to make its way. I'm not going to say it's a household name, but Bitcoin's certainly a household name now. I expect Ethereum to be shortly. And as Jay points out in that chart, do you think it's going to go? You think it's going higher from here, or we're going back to lows? I agree with Jay. We're going, we're going higher on that chart.
Okay, let's talk about your crypto core thesis. I like this term. What is the crypto core?
So the crypto core is an exciting to be identified set of components that are crypto native companies that have made their way to public equity markets. And so, the biggest name today is Coinbase, would be included in the crypto core. MicroStrategy would be included in the crypto core. And then we have a bunch of other names. Okay. Now, what are those other names? We've got the miners, which there's going to be some components that come from the mining side, and then now you have digital asset treasuries, which you'll see a couple of components there. The thesis is that if in the last 10 years, 2015 to 2024, the Magnificent Seven they returned 7x return over that time period. They attributed over 33% of equity returns have come from those 7 companies. I believe that in the next 10 years, the crypto core will have a very similar impact to equity indices that the Mag 7 did in the previous 10 years. Meaning the bulk of the outperformance in equity indices is going to come from the crypto core. Now, I will asterisk this, that the AI trend is going to be significant, and there's likely going to be a set of companies in AI that outperforms similar to the crypto core. But today, as we know it, and the exciting thing about the crypto core is the names are still coming, right? We haven't identified all those names yet. Even this year, there's been, I believe, over 50 new companies, over 500 million in market cap, that are crypto natives that are now publicly traded, right? The number before this year was like 15. That's an insane move higher. And so part of the crypto core thesis is we don't know which names are going to go in there yet, but you can make some certain assumptions that, we just had Circle go IPO this year. Circle feels like a good long-term company that's got great prospects. They could be a crypto core component. Galaxy Digital uplisted from the TSX. Now they're on a major US exchange. They're OGs. They've been around for a while. They could be a component of that. And you've got the names of companies that are coming through the regular way IPO process are long and heavy, and they're some of the best names in our industry. So as these names become public, and as you start seeing the quality companies start to come into effect, the crypto core is going to start forming, and you're going to start seeing some from mining, and then you're probably going to see 6 or 7 from the digital asset treasury cohort. And together, the crypto core is going to be, call it 15 names that are really going to drive equity value in public equities, equity price performance in public equities for the next 10 years.
I love this thesis, and I couldn't agree more. I wish it was as simple as like buying the crypto core index today. If we knew if we would go forward and predict which 15 or 12 or 10 this is going to be, that would just make our life so easy. 2 questions. One is, who's not actually, let me ask this first question first. Is I agree that digital asset treasuries, there will be some that really make it. That feels clear. There's also great risk, which we'll talk about in a second with DATs. You mentioned that before. But before we talk about that, is it just going to be DATs for Bitcoin and Ethereum that are in the crypto core? Or do you think it'll be DATs for other tokens as well? How far down the stack do you think it will go?
So I do think it will be other DATs focused on other crypto treasury assets besides just Bitcoin and Ethereum. But the biggest thing to kind of to pivot on and to focus on is, what is the long-term operating strategy of the DAT? That is where you're going to find these companies. And the DAT trade we started in April 2nd when GameStop kind of announced, right? April 2nd. So we're August 21st right here. So we're only 4.5 months into this thing. I have gone from DATs are ICO, meme coin, NFT, that trend, don't really pay attention to them, to, oh man, if you think about what they've been able to do, which is help solve our industry's biggest challenge, which is access and distribution. These companies now that are sitting on these treasury strategies, those that operate that execute a long-term strategy, which means either acquiring, building, and operating business that generates your core asset, your treasury asset, those are the companies that are going to become household names in 5 years. Everyone will know them because of what they were able to do. Now, there's 180 DATs that have been announced since April 2nd. So 50% of those won't be around in 5 years. 25% of those will kind of be treading water. 15% of those will be like, yeah, we're kind of in the mid caps. It's that 5, 7, 10%. Those are the ones that are going to win. And those are the ones that are going to win because they have implemented a strategy. They've done something instead of just accumulate and hold. And that's what's so exciting about these companies. And you look at Bitminer and SharpLink, and you're like, wow, those are some pretty high quality operators there. There's Bitcoin treasury companies that have very high quality operators there. To answer your question, Jay, there's also high quality operators in the non-Bitcoin and in the Ethereum DATs. And so you have to look to those organizations and say, wow, do I believe in those leaders? Do I believe in their ability to execute? Because that is what's going to really drive value and drive investment return.
Mm-hmm. Mm-hmm. Yeah, I really like the percentage breakdown you have, because I completely agree with that. And many of our guests recently would share the same sentiment, that there will be a select number of DATs that really make it the same way MicroStrategy has, right? And that is a huge opportunity. Difficult to say which one it's going to be. It's still early, but the opportunity is clear. What's the better trade right now? Is the better trade to buy a token in the on-chain way and go buy Ethereum or go buy Solana or Hype, or you pick your token? Or is it better to go buy a DAT that's using that exact same token?
Well, so I guess there's a couple of answers to that, right? And my first answer is whatever you feel most comfortable with. Okay. I think sometimes in our crypto world, we get too much of a, hey, if you're not doing crypto native self-custody, battling against the institutions, it's just uncomfortable I'd say 85% of the people just don't feel comfortable participating, right? And that is a deterrent for them to get involved. That's not what we want to do. I answer that with, okay, well, what are you most comfortable participating in? Mm-hmm. And let's go with that route. Okay. And so that's first question. But from a price performance, buying a token through crypto native ways and holding that is very, very different than buying a DAT. Mm-hmm. It is completely different. And so we need to make sure that that's baseline. It's baseline, a very different way to express your long-term trade. Okay. So I think that the DATs are going to, the ones that aren't operated well will likely be a component to sending us lower in that next cycle phrase that we were trying to time. I think that you don't have diamond hands, you don't have crypto native operators. People are doing it for a trade. I mean, if you look at the pipes and who's involved, they're doing it for a trade. When that trade is over, and public equity investors are different than crypto investors, they're out. And there is no alignment to, oh, I feel loyal to this particular token and I feel loyal to this community, so I'm going to hold on to my bags. sorry guys, this is public equities. I'm in it for the trade. If I've made a return and generated alpha, I'm gone and I'm already looking for my next trade. So it's very, very important to know that you're oscillating between very different ends of this pendulum when you're trying to express these things. And it's unfortunately it's too early to say, but if you are looking to own, if you're looking at Bitcoin and Ethereum, like go with some of the better named groups if you want to go the DAT route. Harder to say still on some of the edge, on some of the edge tokens. And I think the last number that we saw was there's 25 DATs with non-Bitcoin in ETH as the treasury asset that they
There's
are
only
focused
25.
on.
There's only 25. Wow.
No, sorry, there's 25 tokens.
Oh, 25 tokens. Okay. 25 tokens. That's actually quite a few.
That's a lot.
Obviously, like Solana has several, and should. I always feel so bad, guys. I know you guys are going to yell at me in the comments that I'm talking too much about Bitcoin and ETH and not about Solana. Let's be clear. I'm also bullish on Solana. I think Solana does very well. I think we've got some room to go on Solana. My price target is still 1,000 Solana sold for the cycle, which feels high right now. But so to everybody, don't yell at me in the comments that I'm not talking about Solana enough. I love Solana, guys. But that's very interesting.
As
25 tokens.
As do I.
So my guess is you would say that there will probably be more than 25 and more DATs coming in soon. Like every week there's going to be more, which also
there's going to be more than less. There's definitely going to be more than less from here. The pace has slowed down, but I mean, just since August, there's been 32 billion of capital announced for DATs. 32 billion, and we're right in the second and a half week of this month. So there's still capital that is hungry for exposure to DATs and to crypto in this form. From here to the end of the year, it's probably not going to be as significant, but there's still going to be a number of groups, and they're all going to come out, as we were saying, with the non-majors, right? And we're seeing more and more of those come out now because that appetite is there, and this is a significant moment for public equity investors to outperform other indices. And that's why it's until the trade is not generating return, the trade is on, right? And it is interesting to know that some of these lockups, not everything had a lockup, but some have a lockups. Mm-hmm. Those things are going to start coming off in October. So just be careful, because I tell everybody, particularly in crypto, if you aren't in the room when things are happening, you're not in the know. Yeezy as an example, as we open this thing, right? The people that were in the know, they made a lot of money. People that weren't, they were the alpha.
Yeah. Things happen real fast in crypto, and it's easy to forget that. And that's why you got to decide what type of investor you are, right? And if you're the type that doesn't want to pay attention every day, which I want to be clear, all the power to you, right? Like you got a life, a kid, a family, a job, other things that you're doing, great. Then align your portfolio accordingly and sit back and don't fret and don't worry. If you want to be here every day, great. Then you can take a little bit more risk and be a little bit more active, but don't fuck it up, guys. Please don't fuck it up, everybody. The opportunity is just like, I think we can all sit here a year from now and be in a very good place if you just be patient and don't get over your skis and don't over leverage yourself and don't try to get rich too quick. We'll get there.
Well, it is important to note, we talk about cycles and how we're still pretty early in this trade, right? We're still pretty early in these stories of crypto. And so if you're listening to Milk Road today, kudos to you. If you've participated and you've gotten beat up before, totally understand. But we're in a totally different infrastructure and market environment for our industry. And if you're listening kind of first time and you're just trying to get used to and grounded to some of the terminology, bravo to you, because it sometimes participating in crypto is very intimidating, and we need to do a better job of welcoming new market participants like those listening today, and take away some of the intimidation and all the terminology and all the things that are happening. listening to these things like, look, you're early. And if from here till 2030, I guess we're a consensus call saying that we're $1 million. I literally do not know any other investment opportunity that has that type of a return profile. Usually it's a, 10x or a 0. Right? Bitcoin's not going to 0. It's not going to go to 0. So we're saying from here down to 80 maybe, and then up to $1 million. Like there just aren't investments that exist today that have that return profile. So you're early, buy a little bit to get involved, and so you're tracking it. But this is a great time to be involved.
Wise words, Elliot. Really appreciate you joining us today on the show. Thanks so much for your time.
Thanks, Jay. Thanks for having me. Much appreciated. Enjoyed. Don't worry about the Yeezy token, guys. If you're still in it, you're wrecked. And jump on that Milk Road website.
Yeah, thanks. I got to remind you guys, as always, none of today's episode is financial advice. I'm not your financial advisor. Elliot's not your financial advisor. If you need financial advice, you speak to a professional. This episode is for entertainment and informational purposes only. Thanks so much for tuning in. As Elliot said, check out the new milkroad.com site. Super, super pumped about it. We were working really hard on it. And get yourself a discount for Milk Road Pro happening right now. Have yourselves a wicked awesome day. We'll see you back again tomorrow. If y'all are making swaps or trades right now, highly recommend you check out Milk Road Swap. This is a DEX that we built in partnership with Cow Protocol. Why did we build it? Not to make money, just honestly so we could have a place to do our swaps for the lowest fees that we could find. This is the fees on Ethereum, Arbitrum, and Base are only 0.15% fees. This is a huge difference from other centralized exchanges that charge 0.5% or even up to 1.2% fees on their swaps. Also, you can swap on Solana, all at swap.milkroad.com. Check it out today. You won't be upset. And you can join me in my favorite place to make swaps on chain. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.